It's about that time of day again. My name is Joseph. Wednesday evening, February the 7th. Welcome back to your nightly newsletter. We're covering crude oil, S&P, Nasdaq, gold, and euro this evening. Starting off tonight on crude oil, crude is bearish with a combination of a spiking channel and a hidden channel, both of which setting up for some great selling opportunities on Thursday. S&P is bullish and trading at the low of a spiking channel and a trading range. That spiking channel tells me to look for buying opportunities, but I'm waiting for seller failures tomorrow morning. Speaking of seller failures, Nasdaq is also bullish with a big trading range in today's session. That tells me to look for buying opportunities, but only after those sellers try and fail twice tomorrow. Gold is bearish. Another strong move lower today, and I'm watching for selling opportunities using the reversal line off yesterday's low. Euro is also bearish with a strong move lower to finish today's session, and that tells me that sellers will likely be looking for opportunities for another leg lower on Thursday. Boy, I've got a great newsletter in store for you guys and gals tonight. Plenty of reliable trading opportunities setting up for Thursday's session. Before we break this all down and put it all out there tonight, I want to remind you, if you're on the YouTube channel right now, make sure you subscribe to that YouTube channel and click the bell icon so you get notified every time we post a new video. And if you're here on the blog at sidewaysmarkets.com, don't forget to join our mailing list. That way you'll never miss another newsletter. While you're here on the blog at Sideways Markets, don't forget to follow me on social, StockTwits, Twitter, Facebook, LinkedIn. I'm always posting exclusive content that you won't find anywhere else, important charts, links, and updates throughout the week. Speaking of charts, all the charts from tonight's video, how easy is that? Have them on your computer for tomorrow's session. Just follow that link that says click here to download today's charts. And speaking of tomorrow's session, what are you waiting for? I haven't seen you yet in my free pass. Come out and join me on the free pass. I can guarantee you're going to learn more on that free pass than you will anywhere else on the interwebs. Grab that free pass in the upper right-hand corner and come join me as a guest in the trade room. And if you have any questions right now, don't forget I've got live support tools on the right-hand side of the website. If you're on YouTube, you can always post a comment below the YouTube video. And don't forget, I'll put all the important links in the description of that YouTube video, including a link to our free trial, as well as the link over here to the blog at sidewaysmarkets.com. Hope you guys had a great Wednesday out there. We survived. It feels like we survived the beginning here of the week. We got big news behind us on oil, big shakeout probably behind us on the E-minis. And we're going into tomorrow's Thursday session. Thursday is usually pretty darn good days, right? We kind of get the beginning of the week out of the way. Friday's right around the corner. We get a full session in store here for us tomorrow, Thursday, February the 8th. First of all, there's no major news in the overnight Asian session, so no need to worry about that. We do have some news tomorrow morning, 7 a.m. Eastern Time. We're going to hear from the BOE. We got the announcement from the BOE tomorrow morning, 7 a.m. Eastern Time. If you're trading things like the cable or the euro, right, you definitely want to be aware of that tomorrow morning. And then, of course, if you're with us tomorrow, we open up our trade room at 8 o'clock Eastern Time. We're going to have that housing starts number and jobless claims at 8:15 and then 8:30. Don't forget, they export a lot of oil right out of Canada, and of course those CAD news numbers usually move the needle pretty well on the oil markets, right? Jobless claims, of course, being every Thursday morning at 8:30 a.m. Eastern Time. And then tomorrow night, I'll be back here before we get to this time tomorrow night. We'll talk more about this tomorrow, but tomorrow night we get some news from China, get CPI from China before we head into Friday's session. So big session setting up for tomorrow. We get some news from the BOE at 7 o'clock. Jobless claims and housing starts around 8:30. And then again, like I said earlier, we usually have a pretty good Thursday session. So I'm excited to see you guys in the trade room tomorrow morning, 8 o'clock Eastern Time. Let's put this plan together, shall we? Boy, oh boy, I had a great plan from last night's newsletter. If you used last night's newsletter, you were locked and loaded for today's session. But we're only as good as our next trade. So let's make sure we get ready to put it together here for tomorrow. Starting off tonight on crude oil. Then we'll wrap it up on the S&P, Nasdaq, gold, and of course, finishing up on the euro tonight. Starting off tonight with crude. Crude is bearish with a spiking channel and a wide hidden channel for tomorrow's session. The spiking channel already has 3 pullbacks, which is usually a sign that a larger correction is needed to attract more sellers into the market. The hidden channel is a great add-on because it uses the lower lows projected up to the high for a possible resistance level tomorrow morning. Combine these together, and you have the bears obviously in control, expecting a two-legged correction right off the low because of the three pullbacks of the spike in channel, and we've got that hidden channel waiting to be sold up inside the battle zone here for tomorrow. So again, as I mentioned earlier, we can see here there are basically three main components here. The first component, obviously, we talked about this last night in the newsletter. We're expecting this run lower here on the E-minis today. Very clear here, this is a bearish market. So bears have control, looking for selling opportunities until the bulls can take control possibly tomorrow. We'll see. The second piece of this puzzle is this spike and channel, and you'll notice, right, three pullbacks inside that spike and channel. What does that tell me? Well, it tells me that most people probably found a way into the market on the way down. If they didn't find a way in there, they most likely sold the first pullback. If not there, they get a second one. And if they really are late to the party, they get a third pullback, right? And so at this point, every single one of these sellers should already be in this market. Now, if you're already in the trade short, what would it take to get you back in? A correction, right? It'd have to either stop me out, right, on a trailing stop and force me to get back in again, or price would have to rise off this low to attract me enough, right, to attract me into the market again. Usually we're going to get that two-legged correction, right, once we get those three legs down here on the spike and channel. Third component here, take that low, line it up with these lows, project it to the high, and that creates a hidden channel, right? You'll notice that hidden channel now waiting overhead. We can use that as a level of resistance. Combine that with the prior swings, right? Looking two swings back, that'll give me a good shot to sell high above the battle zone, 62.25, and what a better place to sell than a naked reversal line at 62.86. I also have a big resistance trend line coming down overhead, but you know what? Honestly, if we get all the way to that resistance trend line, it's probably going to be a bull market at that point, and so we'll use that as resistance trade around for the bulls. So, three big clues, combining all of these clues together to form a strategy or plan for tomorrow. As you can tell, I'm looking to sell this market, but I don't want to sell here right now. It's a little bit too low to be a seller. I've got some levels of resistance that we're watching here overhead. So what's the plan here? What if price goes up? What if price goes down? What if price goes sideways? Well, I'd like to see the price make another leg higher. I'd love to see us go up, failure at the moving average, failure into strength, strength into pullback, right, and pullback patterns on the way back down. That would be the first, right? That'd be the first kind of scenario to get ready for tomorrow. What if price goes sideways? It could easily go sideways. You can already see we're kind of headed back down right now. So watch closely. If we bounce off of this low, then that becomes a trading range. If this becomes a trading range, we get a bear bias into a trading range, which tells me use the 2-try rule, 1 try, 2 try, and sell back down tomorrow. So very important, if we come in a few hours from now and we see they're bouncing off that low again, that will create a trading range here, and then I want to focus my energy on trading up above the high of that range. What if price keeps going lower here, guys? Well, if price keeps rolling lower, we're going to continue to look to sell short, but we haven't seen much of a pullback yet. So the plan will be to use traps to sell above those highs. Remember, at this point in the game, I'm not going to say it can't keep going lower, but big strong move down, 3 pullbacks. At this point, everybody should be in short at this point, right? This isn't a new start to a move down, right? So we would expect to have to go higher to attract all the additional sellers into this market. So my plan here, if price goes lower, stay patient, wait for that trap, right, and look to sell on the way down, right, to a prior month low waiting at 60.04. So big round number, 60 even, right? Prior month low, that'll be an easy target for us as we go lower here for tomorrow. What about a reversal? How could it reverse? Absolutely. It could easily reverse tomorrow, right? Big move down, sure. Big move back up, but we got to get some proof first. How does that look? Strength, pullback, strength. Strength, pullback, strength. I want to see, and this, of course, is not drawn to scale here right now, but I want to make sure we first get a strong move higher, strong move up, moving average comes over, pull back to the moving average, strength going higher, pull back to the moving average, strength going higher. Once I see that strength pull back strength, then I'm going to go out and draw my channel off the highs. You normally have to draw the channel there off the highs, bring it down to that low, and then I'm looking for a combination between that prior swing and the low of that channel, right, for the buy going back up, basically to retest these highs. 63, 67 is that prior week low. I talked about this last night on the newsletter, and that'll be an easy target for us to the upside here tomorrow. So we've got the bears in control. We have a combination set up right now, right? Channel along with spiking channel, hidden channel, battle zone, and it's painting a very clear picture for where I want to be selling tomorrow. Now all I got to do is wait patiently for it. All right, that was the easy stuff tonight. Now over to the hard stuff, over to the E-minis. E-minis had a pretty choppy session here this week so far, haven't we? Started off on Friday's bloodbath after that non-farm payroll number. Then we had record-breaking down numbers on Monday. Tuesday, right? If you recall, Tuesday was a kind of revival moment here, especially for the S&P and the Nasdaq, where the buyers started to grab hold again and started to move this market going higher. Today now, we really didn't get very much done. Started off going higher, finished the day down, pretty much ending the day in a range with a bull bias. So S&P is bullish with a spike in channel, a measured move, and a trading range on the chart tonight. The spike in channel tells me to look for buying opportunities off the lows with a target back up to the high. The measured move, in this case, it's kind of a measured pullback, is a great support level, telling us we have a two-legged pullback and we should start seeing sellers take their profit here and buyers should start entering the market here as well. The trading range, I think, is the most important, right? Today's information is always more important than yesterday's information. So we're bullish going into today's trading range. And that tells me to look for seller failures using the two-try rule for a move back up to retest the high. So again, a couple components here. First of all, strong move up, pulls back, new high. I'm going to mark up those highs, bring it down to that low, and that creates, right, my spike in channel. Now, I talked about this briefly on the crude oil chart. Usually we see a number of pullbacks inside of a spike in channel. So this will be the second time we pull back to the low of a spike in channel. So plenty more to come if the buyers can hold this. The second thing, right, is going to be this measured move, this two-legged move coming off the high, right? We call these two-legged pullbacks. In a bull market, it's very common to see a two-legged pullback and a retest of the high, right? We talk about this quite a bit. So here we are, one leg, two leg, right, pulling back off that high. Second thing, or should I say third thing, right? Math was never my strong point, right? Third thing, we start off right here today, right? We go down, we go up, we go down, and we're pretty much right where we started off the session. Pretty much right where we finished up the day yesterday, right where we started the session off. Anytime we start and finish in the same spot, we can't call it much of a trend. It's pretty much a range. It's not the prettiest range in the world, but there's really no other way to call it, right? I'm not comfortable calling this a bear market because we're pretty much right where we started the day off, right? It's a bull market overall right now, right? But a short-term trading range. If you watch my newsletter, you know that anytime we have a move higher, right, and then we go into the trading range, whether it's a nice-looking range like we usually see or it's an ugly range like we have tonight, I'm basically looking for that two-try rule. One try, two try, and then back up in. Once we start seeing, right, that second try, one try, two try, then we start watching for that move going back up in. So knowing that this is my trading range right now, we have a very strong move down once. I'm expecting to see another attempt, and I want to use that second attempt to be a buyer going back up to retest the high. Right? So what if price goes higher? What if price goes lower? Right? What if price goes sideways here? Let's zoom in quickly here now so we get a better look at this chart. Right? So here we are down at the low of today's range. We've got that measured move, right, and the low of that spike in channel. Most important clue is that range right now. One strong move down. Expect to see another, right, once it pulls back. looking for that second attempt to fail and make a run back up to retest the high. What if price goes sideways? If we start seeing it start to flatten out here, same plan. 1 try, 2 try, buy off that low. What if price goes higher? If price goes higher, I left this trend line on here for a reason. If this price goes higher, I'm going to try to use this trend line as support, right, for buying. One of the things I don't want to do is buy the high of that range. So it's going to be important that as we come off these lows, right, if we're unable to buy below the low, be careful if this thing runs higher, right? We saw that today. It was a pretty fast move up to those highs, right? If we see that tomorrow and it runs back to the highs, stay patient. You want to get in as low as possible on the way back up to the high. If we end up running back to the high, then we need to see a successful breakout pullback. Want to get that moving average up, breakout through the high, and then we can be a buyer if we can get the moving average up above that high. Specifically, though, what I always look for when it comes to a range breakout is a term that I call the fake out breakout pullback. You can go to my blog or go to the YouTube channel, right? It's called the fake out breakout pullback, right? I've done many tutorials on that. I'll put a link up top here, right? Put a link up top here on the video, and that way you can go check out that lesson on the fake out breakout pullback pattern. With that said here, though, I do want to make sure I go up, 2-legged pullback, right, and then run from there, right? Moving average has to get above the high of that range. Then 2-legged pullback back. You can see a good example of right here, right? We got the moving average out, but then 1, 2, by the time we pulled back, we already slipped inside that range here, right, and the range became resistance. Again, check out that lesson. You'll learn more about, right, that fake out breakout pullback. The buyers want to get back up to the high. If they can get through that high, then they're trying to get up to that prior week close. The prior week close is the big milestone for the end of the week. As you can imagine, we gave back a lot of ground last Friday. We give a lot more ground on Monday. If we can make it back to that prior week close by the end of this week, I think you're going to have traders riding momentum back to all-time highs, right? And people will look at this as being one big dip buy. That, of course, right now is still to be determined. We need to see these buyers respond at these lows first. How do we turn bearish? Great question. Because as you can see, this is a very strong move down here to finish today's session after being rejected going higher this afternoon. Second try, that's what you need. If we can get that second try to continue going lower here, I'll be perfectly fine being a seller here right now, but I need to see them push through this low of the channel. I need to see them push through the low of this range. If we do get that run lower, don't forget, mark up that low, bring it up as a hidden channel, right? And we're looking for that sell. I like to use that reversal line, right, for that sell going back down. You're going to want to see a lot of strength here going lower to qualify this as a bear market, so stay patient on that. Not a great place to sell right now, even if you are a bear already. If you think this is a bear market and you want to be selling, I would definitely wait for more confirmation of the downside before looking to sell a correction, right, just because of where we are right now. So the S&P, you're definitely in a great spot to be a buyer, but I want to see these sellers try once more and fail. That way I can knock them out of the game and run this price back up to retest those highs. Last but not least here on the E-minis is the Nasdaq, right? Nasdaq is in a similar situation, right? A lot cleaner, you can see here, and I talked about this last night on the newsletter. Nasdaq is a lot easier to analyze this chart than the S&P. So Nasdaq is bullish with a trading range and a spike and channel pattern, right, along with a measured move. The spike and channel tells me, right, we should be able to get a few pullbacks to low of this spike and channel. Want to buy the low of that spike and channel. The measured move tells me we have a 2-legged pullback, right, on the way lower. And as you can see here right now, we have a trading range, and that trading range tells me looking for that 2-try rule outside of that range. As you can see, I'm combining, right, a lot of these different pieces of information, right, taking this high, marking up to that low, right, and we're hanging out right down around that low. You may also see some folks do it like this, right, and that might be even a little bit right? So that would also be another option there as well. I don't think it's going to matter too much. We're either at the low of one of them or the low of the other, right? It really doesn't matter. Then, of course, you've got the measured move, right? That measured move is a two-legged pullback, looking for a retest of that high. And then again, right, we pretty much finished the day today right where the day started, pretty much going sideways here. Finish off the day going sideways, or should I say the overall day today was sideways, but they finished off the move with a strong move down. That trading range tells me one try, two try, and then back up to retest that high. So what if price goes up? What if price goes down? What if price goes sideways here? Well, obviously, price keeps going lower here. We'll look for that breakdown, right? That would be the sell here going lower here for tomorrow, right? Looking for that sell area right up there, right? Looking for that sell off of that move. So difficult to want to be a seller here, right? But if price does go lower on strength, we can start watching for those selling opportunities right around the difference between that reversal line, right, and the top of that hidden channel. Target for the sellers, easy, down around that 62, 60 half area, right, tomorrow. As we go sideways here, one try, two try, looking for that second attempt from those sellers. This is the first attempt, looking for one more attempt to go lower. Once we see those bears stall out after that second attempt, right, we're going to look for that move going back up to retest the high. Again, if we start seeing it range bound here, one try, two try, and back up, right? Looking for the buy below that low. And then what if price goes higher here? Price goes higher, we got a couple different options here, really. If I zoom in on the chart a little bit more here, we have this moving average, right? So think about it this way. There's your one try, there's your two try, failure into strength, strength into pullback, back up we go, right? And a lot of times we'll get that failure above the moving average. The pullback will usually come right about the same price that the failure happened, right? And then, of course, look for that move going back up to retest the high. Don't forget, you've got resistance up top here at those highs. You're going to want to see that moving average get up, two-legged pullback, right, for that trap low, and that move up to the prior week close. As you can see, the prior week close is a whole lot easier to get, right? You can wrap your arms around that prior week close a lot easier on the Nasdaq than the S&P right now. So again, I think a very big psychological level will be that last Friday's closing price. Very choppy right now on the E-minis. You know, we've been talking about this all week in our trade room. These are those couple times a year where, you know, the dust gets kicked up. There's a lot of people involved in the markets right now that aren't normally actively involved. You've got hedge funds, you've got large individual traders, day traders coming in, obviously, all of which right now are trying to get a handle on what's happening after that record-breaking pullback that we saw on Friday into Monday session. This will calm down, right? This is not going to be like this forever, right? We're seeing a lot of candlesticks every day. As I've told everyone in our trade room, if you're not comfortable trading this price action, there's no gun to your head. There's no one forcing us. We have plenty of other markets I'm covering here tonight, right? So just want to kind of give you some words of encouragement that this is not going to last forever. We're seeing some really chippy, choppy price action right now. That sometimes the best trade is no trade at all. If you don't feel comfortable, right, feel free to sit on hands, go trade a market like oil or gold or euro. They are moving fantastic right now. And this is a good reminder, right, that it's not long term, it's dangerous to be a one-trick pony, right? If we only know how to trade one market, or if we have a strategy that only works in certain market conditions or in certain markets, right, then we know these are times when we really get in trouble if our strategy breaks down during these times, right? So I think a lot of what's happening right now is you're probably going to see a lot of traders get weeded out of these markets right now because they don't know how to trade in range-bound markets. They don't know how to handle excessive volatility, et cetera, et cetera. We'll talk more about this and how we're adapting to this tomorrow in the trade room. But again, just be careful, right? These E-minis are not easy right now. It's not going to be forever, right? But it could be tomorrow again. We could see their day tomorrow. The volatility continues to drop a little bit inside of our sweet spot. I'm excited, another good day for tomorrow. Okay, over here to the gold. Now we start getting a little bit easier now, right? These are a lot more easy, a lot easier charts to analyze. Again, the E-minis really got their butts kicked earlier this week, and so everyone's kind of reacting to that right now, and that's what's causing, right, kind of the dust to get kicked up. Other markets, though, are great right now. Look at gold, right? Beautiful, beautiful scenario there on gold. If you watched last night's newsletter, you were ready to make a great profit on gold today. I hope you guys had a great day on the yellow metal. Gold is bearish, obviously, and trading at the high of a bear channel. That tells me to start looking for selling opportunities going back down to the low tomorrow. The two important clues to really consider. First, the measured move, right? And second is the rising support trend line. First, the measured move, right? This measured move at 15.5, usually when you get a measured move, you're going to get two legs higher and then a retest of that measured move. You almost always get a bounce off a measured move and then a retest, right? So same thing on the S&P and the Nasdaq, right? We're reaching those measured moves. We're expecting those bears to try again, and then we can look. So we're expecting to hit that measured move again on the gold here at some point. The second thing is you'll notice I've drawn up a little bit of a rising support trend line. Right, that rising support trend line is going to be used for a two-legged pullback. It may also be the savior for the bulls, right, if the buyers can take control. Last but not least here, right, third thing is that reversal line, that reverse target up at that 22.1, and I'm using that reverse target off that prior month low, 1309. On gold is going to be a hot number here, that prior month low. It feels like right now gold is just determined to get down to that prior month low, and we're trying to reverse engineer that with that reverse target. So as you can see here right now, drawing that channel down off the highs, we're sitting here right at the high of this channel. Now that would normally tell me to be a seller here, but there's some more information here right now, right? Specifically the measured move. Right? We just came off the measured move. Now, typically when you get a measured move, you get a two-legged pullback. We really haven't seen that yet, right? It's kind of been a whole jumble down here, right? So draw that trend line down, up, and back down to that measured move, right? That's typically what happens on a measured move. Then, third thing here, right? A couple more things here. Find some levels of resistance. Got a prior reversal line there at 22.8. Got a prior reversal line here at 22.1, right? Great levels of resistance. Those would be excellent areas now for me to get a sell going back down. And then another thing, right? Look at that measured move. Take the size of this range. We know where the sellers are probably hunting for. So why not reverse engineer? Why not use that, right? Why not use that as a size or of an opportunity for us to predict where that pullback will go, right? So combining all of these clues together, right? The combination of all of these clues, all these breadcrumbs, all these little hints we're getting are allowing us to put together, right, what should be a pretty reliable trading strategy here for tomorrow. So the most important thing right now is we're expecting to see a two-legged move here. We already have what appears to be a rising support trend line. We'll love to get the price up, right, and then back down off of that trend line. A lot of resistance levels here, right, waiting overhead. Oftentimes those two-legged pullbacks, they end up turning into buyer failures, failures lead to strength, and strength going back lower, right? So a lot of times we get that two-legged pullback, buyer failure, right, into a breakout pullback going back down below. What if we go sideways here? It doesn't look likely right now, just the way this day ended, but if we do happen to go sideways here, still bearish, one try, two try, back down in from there, right? Watch that first try, second try, and then look for that drop in from there, right? What if we go lower here? If we go lower right now, we just kind of collapse back down. In the short term, you want to look for some traps, right? Because I don't want to sell too close to that measured move. So in the short term, if it just drops here, right, and doesn't pull back to resistance, we expect obviously to be retesting that low at 13.5, but I don't want to sell too low, right? So I'll look to sell up off a trap high. So if we don't get the pullback up to that reversal line at 22.8, 22.1, and prices collapses back down, we can look for traps up above prior swings. Anytime I'm in a position where the only option is to sell into support, don't just sell it and hope for the best, right? Look to sell, but after you see a trap high on it. Now, with that said, right, how do we turn bullish here right now? How do we turn bullish? We got strength. All we need now is a pullback. Strength off that pullback. And if this sucker continues going higher, right, we continue to see this thing pushing higher here. Yep, now we know, right? Now we know. Going to look for that. Going to look for that two-legged pullback. And we'll use that hidden channel as a level of support tomorrow. The key to a trend reversal is strength, right? We want to see something similar to this. Look at how strong this move down was, right? Look at how strong these moved down were, right? Lots of red candles, not many, right? Not many green candles. I'm going to want to see it strong going higher, right? If it just pulls back and starts, right, kind of trying to go higher, no, that's not a reversal yet, right? That's not a reversal yet. It's got to really run, right? That's when you know you have a trend reversal. Got a great plan there setting up for gold. It's been a great month here so far on gold, and looking forward to more, right, in tomorrow's session. Wrapping up here tonight on the euro. As you can see, the euro right now double testing that measured move like a good market should. Euro is bearish with a strong move back down to retest a larger bear channel we've been using this week. Another example, if you watched last night's newsletter, we talked about this strong move up, wait for one try, wait for two tries, and once you saw that big red candle, it was lights out, right, for those buyers. What a great example of what we talked about on the two-try rule from last night's newsletter. All right, so euro is bearish with a strong move back down to retest the large bear channel we've been using this week, right? So here we are now back down to the large bear channel. We're trading at the lows of this channel, which tells me to expect buyers are going to want to rotate back up to the highs. But I'll be honest, the strength of this move lower this afternoon is so strong that it tells me that we're probably not going to get much of a pullback off of these lows, and I should be open to getting a little bit more aggressive down here tomorrow morning. If I rewind the tape a little bit here, again, we talked about this in last night's newsletter. We had this pretty obvious multi-day bear channel, right? And of course, the goal of last night on the newsletter was to get a short going here off that high, right? So great job going back down to that low. Well, now here we are. Now we're down around the low, right? Now we're down around the low of that channel, right? So you would think now we're going to probably go up to the high now, right? And then look forward again, right? Kind of like what we saw yesterday. And that may happen, right? That definitely may happen. But the reality is that usually when you see this much strength in one direction, pull back, retest the low. That's usually what happens. Now you'll notice again, right? You can see what happened yesterday. We saw a pretty similar situation. Strong move down, it made another leg lower, and then, right, and then it went higher, right? So as we have this move down, look for that second leg lower, and then, right, we can look for that move going back up, right, to the high of that channel. So at this point now, we're sitting at a measured move. I'm expecting, from what I can see so far, it looks like we might end up going sideways here, right? So bear move down into a sideways range. One try, two try. Get those buyers to try once, buyers try twice, right? And then back down, right, into that range. We go from there. I've got some prior swings. I have a reversal line here, right? Pretty easy there, right? Get it up. And then back down we go from there. If we keep going lower, right? If we keep going lower here tomorrow, not much changes. I'm still waiting for a chance to sell high. If it keeps going lower, looking for a move up to resistance so I can sell it back down again. If price goes higher, right, what will probably happen if it repeats itself, right, is we'll probably see a very strong move higher. That strong move will need to hold the pull back to the moving average. And if we see it strength from there, then we know we have the buyers in control. But be careful, right? Because as you can see, if you don't get into it early enough, right, you're going to run right into the top of that channel again. One try, two try, and we'll look for that move back down. So the buy side is going to be a little bit tricky. As you can see, looking back in time here, there hasn't been much opportunity to be a buyer. By the time it confirms bullish, we're usually right back to the top of that channel. So if we do get it, it's going to be quick. Strength, pullback, strength. and then you can look for that entry somewhere on the way up to the high of that channel. Just be careful though, because at the top of that channel, right, coming right in quickly, and you don't want to get trapped, right, being a buyer and basically being the last one, right, holding the bag there when it drops back down to that low. All right, guys, got a great plan here for tomorrow. Euro, gold, Nasdaq, S&P, and of course, the oil markets. I hope you guys found value in today's nightly newsletter. If you did, would you do me a favor, right? Give me a comment on the YouTube channel. What's the most important thing you learned today? Drop me a comment in the YouTube comment section. Give me a thumbs up on YouTube as well. And don't forget to subscribe. That way you never miss, right, another great video lesson. If you're on the blog right now at Sideways Markets, don't forget there are links on the blog to join our free trial. If you're on YouTube right now, the links are in the description. Head here to the website at schooloftrade.com. Join our free trial. I can guarantee you, if you love the nightly newsletter, if you like my psychology videos, you're going to absolutely love my free trial as well. I put my heart and soul into that free trial. I'll shoot you an invite to join our trade room on a free pass. Join that free trial on the homepage of the website. And while you're here, don't forget our beginner, intermediate, and advanced classes mean we have a place for everyone, whether you're brand new to your day trading career or you're a grizzled veteran, right? I look forward to helping you launch, right, or finish, right, a very successful trading career. Don't be a stranger either. Again, if you got any questions, you can post those questions in the comment section on the YouTube channel. If not, if you're on the website right now, I have live support on the right-hand side as well. Guys and gals, my name is Joseph. Thank you so much for being here. We're going to be back here tomorrow, 8 o'clock Eastern time in our trade room. If I don't see you guys there, I'll see you same time, same place tomorrow night on our nightly newsletter. Be well out there. Be nice to each other, will you? And be here next time. Adios, amigos. Bye-bye for now.